Welcome to the Intelligent Investing Podcast, where modern portfolio theory can suck it. A student of the School of Graham and Doddsville and a clergy member of the Church of Warren Buffett, here's your host, Eric Schleien.
Hi, you're listening to the Intelligent Investing Podcast, and this is your host, Eric Schleien, and we have Peter McCormack on today. Peter, welcome to the show.
Hey, man. Thanks for having me on, dude.
Absolutely. No, you have an accent. Where are you from?
So I live in a small town called Bedford, which is about 40 minutes north of London on the train.
Okay.
Not far from Cambridge, actually. Yeah, it's. I used to spend a lot of time in America though before all this happened. I've been to Washington a few times.
Okay, great, cool. How do you like America compared to where you're at?
Love the country, hate the politics, man. Love the country.
I hear you.
Been to so many different parts, which are great. Wyoming, I like California. I like Portland. When I went to Portland, I thought that was great. I love New York. Pretty much everywhere I go, I love the people.
It's so funny. It's very
politics.
rare to hear someone say, I love Wyoming and California in the same sentence.
Well, for different things.
Of course. No, I get it. I'm the same way.
Right,
I'm the same way. I hear you.
Yeah, it's just a vibe. But I also love the Cowboys up in Wyoming.
Nice. Now, what is your background? I know you have a pretty successful podcast yourself. Is podcasting your full-time gig, or what do you do?
It's my full-time gig now, but it's not always been that way. My background's advertising. I did close to 20 years in the advertising industry on the digital side, on the web, email, social. I pretty much worked in that from not long after it started being commercialized. And yeah, did 20 years in that, burned out in the role of a consultant. So took some time off and then stumbled into this world of podcasting.
How did you get into podcasting? How did that start for you?
Well, so it's like just a weird chain of events, but I ended up in Italy at a vegan yoga retreat run by this guy called Rich Roll, who has a very successful podcast. He's like an ultra athlete who does like ultra.
How do you spell his name? How do you spell his name?
So Rich, R-I-C-H, and then Roll, R-O-L-L.
Okay.
And he's very successful podcaster, does very well. And I was at his event and just hanging out with him, and he said, if you're ever in LA, let me know. And I used to spend a lot of time there because one of my friends is there. And it was around 2017, like early 2017, I was kind of getting into this Bitcoin thing, and I was hanging out in around LA, and I just met up with him. I said, I think I'm going to do a podcast, Rich. Like, how do you do it? And he was like, well, dude, you need to check out this course by this guy, Pat Flynn, and then you need to buy this equipment. So I went on Amazon and bought the equipment for next day delivery. And
did you do the course? Did you do the Pat Flynn course?
I did. Well, yeah, I did like the free course or the basics of setting it up, and then phoned up a friend. He said he'll do an interview, and here I am. Just over 3 years later, and probably 350 interviews later. It's gone so quick.
Look, was that course useful? Would you recommend it to new podcasters?
I think it's useful for the technical side, just the basics of setting it up, of creating your feed and getting your feed set up with iTunes and all those kind of things. In terms of being a podcaster, I don't know how helpful that was. I think in terms of being a podcaster, you got to just get out there and do it, dude. I mean, how many have you done now? How many shows?
About 130.
Have you gone back and listened to like the first 2 or 3?
They're terrible, yeah.
They suck, right?
Yeah.
So
especially that first episode.
Oh, dude, it sucks. I mean, I don't like listening to mine anyway, but going back to those first ones, they suck. And it's like anything. You just got to keep doing it and keep doing it. And one of the things I found is good to just listen to other people's podcasts and see what they do and get ideas from them and work on your craft. But I think it's worth it for the technical side for sure.
Cool. You do mostly talking about Bitcoin and crypto, right?
Yes and no.
Okay.
I've got 2 podcasts. So the main one, I mainly talk about Bitcoin. I don't say really crypto because I'm not interested in any of the other cryptocurrencies outside of Bitcoin. Apart from like maybe I've got a little bit of interest in something called Monero, but for the sake of your listeners, and it's an important point, you should ask me why at some point, but I'm entirely focused on Bitcoin. I do have another podcast all about like more like deeper topics. I did a Ghislaine Maxwell investigation, did some on Steve Mnuchin. But I mean, I think for the sake of this one, we're going to focus on the Bitcoin thing. Yeah. And I'll explain, well, rather than you ask, I'll explain it. This will be important to your listeners because if your listeners are people who are investors, We're hearing a lot about Bitcoin at the moment, and certainly if they're not invested, they'll be considering and thinking, should I get involved, blah, blah, blah. And if they do, they might stumble across the cryptocurrency industry and automatically think all of these cryptocurrencies are worth investing in, when I actually don't believe a single one of them is worth investing in, certainly over the long term, outside of Bitcoin. And we can get into why. Some of them, look, if you're a trader, you know how to trade and read charts, perhaps you might want to do it in the short term, but it's penny stocks. It's all nonsense. I am the only cryptocurrency I think that has any long-term value is Bitcoin, and it's the only one I'm interested in.
Well, why don't we just jump into it? Why only Bitcoin?
Well, let's talk about why Bitcoin is so important. What are the important things, like features of Bitcoin? Why has it been so successful? I think that's a starting point. So before Bitcoin, there was a group of people who've been trying to solve the idea of non-government controlled money, let's say. And there were a number of different attempts to do this. David Chaum did one called DigiCash, which was quite successful, but that failed because it was centralized. But there were lots of
what was his name? Who did DigiCash?
David Chaum, Chaum, and he created DigiCash, but it failed ultimately because it was centralized.
Okay.
The great thing about whoever Satoshi Nakamoto is, people who created Bitcoin, is they fit the pieces of the jigsaw together to create a fully non-government controlled form of money. What you actually have with Bitcoin is something that's quite unique in that it's in its decentralization. So for anyone listening, what decentralization means is, in the context of Bitcoin, is anybody at all who holds Bitcoin or has an interest in Bitcoin can download what is called a node. And with that, they can download the blockchain, the entire Bitcoin blockchain. And on that blockchain, it has every transaction that's ever existed. And the reason that's important is if you've got a copy of the blockchain, and I send you some Bitcoin, your blockchain will validate that transaction. So you will know you've got that real Bitcoin from me. And the great thing about that is that these computers that are running the Bitcoin software all around the world mean it's decentralized. It means that governments can't switch it off. So for example, they can't destroy it. So that's a better way of saying it. So when China kind of banned Bitcoin, okay, people maybe stop running those nodes, but all across the world, these other nodes continue running. And that gives you a couple of really important features about Bitcoin. So the first one is that it's censorship resistant, which is really important, which means if I want to send you money, I send it to you and no one can stop me. If you want to sponsor WikiLeaks and you want to help them with their work, when Visa and MasterCard refuse to process their payments, you could do that. It also means it's seizure resistant. So in Greece, when the government took a haircut of bank savings of people, I think it's over $100,000, it was them or Cyprus, and people lost money because of the failure of government. You can't seize Bitcoin because you hold the private keys. First thing in the world, really, where you have true property rights, and it's protected by cryptography. So Bitcoin's really important because of that.
Quick question for you on the seizure resistant aspect, right? There's news articles that you'll see saying, the Fed seize, X amount of Bitcoin from, Silk Road or something like that.
Yeah.
So would that be an example of a seizure? Or
when I say seizure resistant, if you own the private keys, nobody can take that from you. If you've got gold in your house, they can come in and take it.
Right. Got it.
But they have to have the private keys. The private keys cryptographically protect your Bitcoin. What happened with the Silk Road is they got access to the wallets, so they seized it. So there's been times when they've got access to wallets, and they've managed to seize the Bitcoin that exists within those and auction them off. But they have to get access to the wallets. This is what's really important about Bitcoin is nobody controls it. It's completely decentralized. It can't be switched off. It's got all these unique features. And that's really cool. And a lot of it works on this thing called the blockchain. That's a very important part of the technology. But what's happened is this industry's built up, this cryptocurrency industry, where people have tried to create other projects using blockchains and to sell them off as having certain types of features that might make it better than Bitcoin. And there's lots of different types. You can have altcoins. You have something like Bitcoin Cash, which says you can have faster and cheaper payments. But economically, that's been proved to be a red herring. You have something like Ethereum that wants to be a world computer, but the problem with Ethereum, it has so much data being processed every day that these go on the blockchain, it has issues with scaling. So I think this is all nonsense. So I focus entirely on Bitcoin, which I personally believe over the next 10, 20, 30 years, whatever the time frame, it will become the most dominant form of money and already is a global currency, but will be the primary global currency that people use. And that sounds hyperbolic, right? So you can ask me about it. When I first got into Bitcoin, I heard people say these things. I was like, yeah, come on. But I'm there now.
And do you think there'd be other competing currencies with Bitcoin in the future? Or do you think that would just be it?
No, I mean, I think you're going to have these other maybe stupid altcoins that you will have sovereign currencies competing for a certain time. Mm-hmm. And you may have CBDCs, these central bank digital currencies. But ultimately, the best form of money wins. Right now, like I used to invest in Bitcoin. Now I de-risk pounds. And what I mean by that is I'm only nervous with Bitcoin in very short time frames. I'm very confident with Bitcoin, very long time frames. 3, 4 years, 4-year cycles, I'm super confident. But it's a volatile currency. Mm-hmm. So in terms of running my business, I only ever keep in the bank what I need for the next 6 weeks cash flow. Everything else goes into Bitcoin because that's the money I'm not spending. They're my profits. And I have the belief that's a better form of money, a better place to hold my money. And that's proved as a correct thesis for me over the last year. I mean, just as an example, I had something like $170,000 in profit, let's say, for my company over the last year. But I kept putting that into Bitcoin at the end of each month. The balance sheet now holds close to $500,000. It's in Bitcoin, but it holds that. And that's because I choose to hold Bitcoin instead of dollars or pounds.
Now, one of the features of a, say, good quality currency would be stability, right? Mm-hmm. So do you think going in the future, the volatility of Bitcoin will come down as it becomes more and more accepted? Because I mean, right, if you had a currency going up and down by 50% swings, that would be not a very viable form of currency long term.
Yeah, so it's interesting. It's something that I've always kind of like tried to get my head around is that how do you get over the volatility and blah, blah, blah. But somebody explained it to me. It said for Bitcoin to become dominant global currency, it needs a market cap in the trillions. I mean, gold is 10 trillion. And he said, think about, you can't go from 0 to 10 trillion in 2 decades without volatility. It doesn't just go up in a straight line. It goes up and then people think, God, I've made a lot of money here, and they sell some and then it goes down. But over time, the volatility is decreasing. Right now, Bitcoin isn't a medium of exchange. I mean, it's for some people, they're using it, but it isn't a unit of account. Therefore, it makes it difficult as a medium of exchange, but it's certainly a store of value and it's certainly collectible. But my view is that over the next, we're seeing these transitions. So I use it for a medium exchange in that my sponsors, I encourage them to pay me in Bitcoin. I would rather have Bitcoin. Will I use it to buy a cup of coffee? Not for a long time. But could I in 20 years or 10 years? Perhaps.
Interesting. Now, say more about the blockchain and sort of what you see for the future of that technology. Because my understanding is there's other use cases other than just currency.
I mean, within the Bitcoin blockchain, there's a couple of use cases. It's good for timestamping, and it is good for identity, wrapping your identity to the Bitcoin blockchain. But outside of that, again, it goes back to that point of these other altcoins. I have no interest in what people are using blockchains for. The blockchain was designed for use in Bitcoin, and it works perfectly well. It's now been almost used as a marketing term to sell.
Right, because I hear about it. The future of banking is going to be on the blockchain. The future of securities trading is going to be on the blockchain.
No, it's just not. It just isn't needed. It's Bitcoin, not blockchain. That's what you need to remember. It's somebody using an opportunity and they're selling the marketing of it. But blockchains are very. Let me explain what a blockchain does, and then I'll tell you how inefficient it is.
Okay, perfect.
So a blockchain is literally the best way to think of it is obviously it's a chain of blocks, but think about it as floors in a building, right? And every 10 minutes a block closes. And that sits on top of the next block. But imagine you're building a building, each time it's a new floor. And what the blockchain does is every time a block is created, that keeps all the transactions that were collected up in those last 10 minutes by the miners into that block. And it cryptographically protects that. And what happens is, as more blocks are built on top, the transactions below them are even more secure. Now, most places tend to wait for 6 confirmations to confirm a payment. But what that means is 6 blocks have been built on top. Okay? So that's a really important way of stacking. So the best way to think about it is people may want to go and create fake transactions. But if they want to go and create fake transactions, they have to create it in the previous blocks while new blocks are being built on top of it. So they have to rewrite those blocks. So just imagine you built this floor in a building. You're like, crap, we got something wrong. We got the bathroom wrong. Need to change the bathroom. That's kind of easy. Yeah. Or we need to change the roof, whatever. Imagine doing that now. You've got 6 floors on top. You say, we need to go and take that floor out and rebuild it. You have to take them all out to do that. And that's what a blockchain is. It's slow. It's cumbersome. Like I said, it's every 10 minutes, the Bitcoin to create a new block. But all it does is keep a bunch of very basic data on transactions. Using that for other, wanting to do fast transactions or lots of other things with big amounts of data just means lots of data builds up. And I'll show you where this becomes really important. So the Bitcoin blockchain has been running for 12 years, currently holds 320 gigabytes of data. So you can run a node on your computer, probably on your laptop. I know I can do it on mine because mine's 512. The Ethereum blockchain, which has been running less than half the time, has 4 terabytes of data.
Okay.
So if you want to run a node, you either have to have some impressive hardware setup, or you probably have to use a service like Infura with Amazon. The point being is, you, me, someone in Santiago, Chile, someone in Nepal, and anywhere in the world who can get a computer with 512 gigabytes and an internet connection can run a node. You can run a node with a Raspberry Pi.
What is the advantage of running a node?
Well, everybody who is running a node is keeping the system decentralized and supporting the network. So we want tens of thousands of those. But secondly, you are validating the transaction. Rather than trusting I've sent you the money, or trusting someone else's node, when it comes in, you know that Bitcoin is yours. You know 100% it's a valid transaction because your node runs the consensus rules and it checks that those transactions are valid.
Is that going to slow down your computer by doing that?
I mean, if you were going to run a node, my suggestion is you get a Raspberry Pi or a separate laptop and you do it on that, rather than run it on your main computer. But a lot of people run nodes. This is the point. This is what keeps it decentralized. So you look at something like Ethereum. Honestly, I don't know how many full nodes there are, fully validated nodes. I'd be surprised if there's more than 10. There maybe are. But that's not particularly decentralized. And this is the idea of this technology. The reason you have a blockchain is keep these things decentralized.
Right. Now, pardon my ignorance on this question, but is there any kind of liability for running your own node?
Nope.
Okay. Interesting.
None at all.
Okay. Now, what about Bitcoin mining? Can you talk about that a little bit?
Yeah. I mean, Bitcoin mining is the way the network is secured. So what happens is Satoshi Nakamoto, when they created Bitcoin, he wanted to have a way of creating security in the network and building the blocks. And the way the blockchain works is that all the miners, I did this with my son yesterday, it's easy with a piece of paper, but all the miners are these machines. And all they're doing is they're running a script to try and answer a puzzle. And that puzzle should take about 10 minutes. And the first one to solve it ends up creating that new block, which is the new tier on the floor. And they fill it with all the transactions, and then everyone starts competing to create the next one. Okay, that's called proof of work. They have to spend cost on electricity to mine the Bitcoin. But the reason that's really important is because as all these miners are competing and building these blocks, they all follow the longest chain. So if you want to hack the Bitcoin network, basically, and create a new block and create new blocks on top, you have to control 51% of the mining capacity power. Otherwise, you won't be able to outcompete the blocks. Now, the reason that's really, really super important is that protects the integrity of the system, keeps all the transactions honest. It keeps all the miners honest. The game theory isn't there for any of them to lie and create fake transactions. The absolute incentive is them to be honest. They also, each miner gets paid every block. So every time they solve a block, they get 6.25 Bitcoin plus whatever the transaction fees are. So they're incentivized. So 6 point whatever in a block, let's say 6, that's about $250,000 now.
Yeah.
Plus the transaction fees, whatever that is, to solve a block. Pretty good. But there are so many computers out there competing to solve it. It usually trends towards break even.
Okay. If you were to run a Bitcoin mining machine, is it unlikely it would ever solve a block now?
Yes. So you would join a pool. So you would contribute the hash power of your miner to a pool of miners who are all competing. And when a block gets solved, you share the rewards. But it's very hard to make money mining It's very competitive. It does well in countries with low cost energy, like Russia.
Venezuela or
Apparently
something.
Russia's
right?
moving into this space now with almost free energy.
Huh. Okay. Interesting. What about, so if someone wants to get started and wants to start putting some of their cash reserves into Bitcoin, what's the easiest way to do that?
Okay, it's a good question, but I would say you have to go a step back.
Okay.
You have to have an investment strategy.
Okay.
Bitcoin can be a very punishing investment if you get it wrong.
Mm-hmm.
You could have gone in today at 42,000 and now it's dropped as low as 39,600. That's a 5% swing in a day. It did a 10% swing yesterday. Mm-hmm. It is volatile. It can be punishing. You can get nervous. You can end up using leverage and get wrecked, blow up an account. What I've learned, it's funny, I did a tweet thread on this today. You should go and check it out. But What I've learned is you have to have a long-term commitment to Bitcoin, at least 5 years. Yeah, you could get in time right and get lucky, but strictly speaking, you should have a long-term time horizon. Mine's 10 years. I don't intend to sell any for 10 years.
Okay.
All I'm going to do in those 10 years is every single month, I'm going to make sure I end the month with more Bitcoin than I started the previous month. Now, the important thing with Bitcoin, there's only going to ever be 21 million coins. So it has a limited supply. So my view is the percent of that 21 million you own is your score. Mm-hmm. And I'm going to play that game as best possible to get a higher score possible. Because as more people move into Bitcoin, very basics, supply and demand 101, say that the price will go up. Therefore, your investment will scale with that. So I would say you've got to have a long time horizon. You've got to be patient. And then you've just got to decide how you're going to stack your Bitcoin. Are you going to do a lump at the start? You can do a regular amount each month. A lot of people like to dollar cost average, $100,000 a month, $500 a month, whatever, over that time horizon.
So you can buy fractions of Bitcoins.
Otherwise, what a disaster.
Yeah. Right. Yeah.
Yeah. It goes up to 8 decimal places. So the decimal is called a sat. There's 100 million sats to a Bitcoin.
Okay. Now, who do you think Satoshi Nakamoto is?
Wow. So we within the community and other Bitcoiners have kind of come to a kind of collective agreement that even if we knew, we wouldn't say, because that person has chosen to become anonymous. And actually what they've done is created something of beauty, something that's pretty cool. And there's no benefit to anyone knowing what it is. It's only negatives. So
right. Do you think it's an individual or a group? If you had to guess.
I think it's an individual.
Yeah. Now, there's a whole thing, right, where that individual or whoever it is, or group, whoever it is, hasn't touched any of their Bitcoins, right, in their wallet. Mm-hmm. There's a way to see that. So what do you think the reason for that is?
Two main reasons, I think. Either they're dead. Mm-hmm. Well, three, actually. Either they're dead, either they burned the keys because they didn't want it, or they've just made a decision, even though they haven't burned the keys, not to want it. My expectation is I don't think this person's money or fame driven. If it was me, I'd be like, yeah, I made it. Here I am. I'm a fucking billionaire.
Yeah, because what is that wallet worth today?
Billions.
Right. Wouldn't they be the wealthiest person in the world or close to it at this point?
I think the price came out the other day. But Bitcoin's hit $547,000 a coin. They become the richest in the world. They most likely, that wallet will become the biggest honeypot in the world. Good for a hacker who feels they can go at it. But I think this person isn't driven by fame and isn't driven by fortune. They're driven by trying to improve money, trying to give people a good form of money. And they've achieved it. And I don't think they would want to break that.
So interesting. Is there anything else? I'm as dumb as they come when it comes to Bitcoin, right? I'm a total moron around crypto and Bitcoin.
Have you bought any?
I have not. My brother has a Bitcoin, but I have nothing.
But you have an investor podcast, so you're thinking about it.
Of course I've thought about it. Yeah.
So what's stopping you?
That's a whole other conversation. But what I wanted to ask you is, are there any questions you feel like I should be asking you that I haven't yet that would make for some interesting conversation?
Well, I think what would make it interesting is that I think there's people in your position who like right now are looking at it and going, I'm too late, it's too expensive. Mm-hmm. So that's why I was asking, maybe why haven't you taken the plunge?
Personally, I tend not to talk a lot about my personal investment strategy on here, but generally for myself and also for my investors, I'm looking at buying assets where there's really not a lot of downside whatsoever. And actually, even in a bad scenario, you can still make money. So Bitcoin would be low something risk. Very, very low risk. Yeah. So, Is there a scenario now? Look, you can push back on me. Do you think there's a scenario where you can lose, where in 10 years from now, Bitcoin is lower than today? What would break the Bitcoin thesis?
I think the only scenarios where it's lower today is it's dead in 10 years.
And how would that happen? Because this is how I think it's an investor. How do you destroy the thesis?
Yeah, I don't think you get the hash power to destroy it because it's just too expensive. I don't really think you can ban it. Mm-hmm. You can ban it in certain markets, but like if the US banned it, I'm sure someone will go, well, we'll have it. It's perfect. Like Malta is very open because they want businesses to come there. Mm-hmm. So I don't think you can ban it. I think you can regulate it to the point of it being not particularly useful. But even then, in that scenario, no, I don't see a scenario. You know what? I'm running through my head that I don't see a scenario goes to zero. And therefore, I don't actually see a scenario where it doesn't not exist in 10 years. So I don't see a scenario where it isn't worth more.
So I'm curious. So like, let's say in a scenario, you're not allowed to, if you're a business, right? You're not allowed to use it in your business. There's heavy regulations around it. You can't get a loan, or there's all this stuff, right? I wonder, do you think the price of Bitcoin today reflects the notion that there's a good possibility it becomes the world reserve currency, and then if it gets banned in the United States or mostly banned, would that then impact sort of the future perception? So sure, it's still around, but now it's $5 a Bitcoin.
I don't see $5 a Bitcoin. If it was, I'd buy everyone I could. I don't see that happening because Bitcoin's been up. Bitcoin should have failed, right? It's been up against so much hate, so much like baseless accusations about it. It's had a civil war, had the Silk Road, it's had all this stuff that worked against it in some way or another. And yet here it is. Today, it's floating around $40,000, and it looks like it's going to go a lot higher. I think people want good money, and they want hard money. I think people are fed up of what the government's done with their money. I also just think it's gone too far now for the government to ban it. It has a regulatory moat. It has people within the Senate, say in the US, who are pro-Bitcoin. The OCC
who's pro-Bitcoin in the Senate?
Senator Lummis, Senator-elect Lummis of Wyoming. Warren Davison, I think he is Ohio.
Oh, interesting. Okay.
And there's another one. They're pushing back against some of the stuff Mnuchin has been doing. So I just think we've gone too far now. I don't think there's an appetite to ban it. I think there's an appetite to regulate it, monitor it, tax it eventually. But I don't think there's an appetite to ban it. So the 21 million itself is a very attractive thesis for investors, a credible asset which has a strict limited value.
Do you think Bitcoin supply would get taxed at some point?
I think that they could make attempts. I don't think it's going to be easy though, because there will be plenty of people who've been very shit hot with their privacy, very good with hiding their Bitcoin from government. I also think there's going to be a lot of people with a lot of Bitcoin who are just going to move to tax-free countries because they're looking at their money and think, I'm sat on this. Why am I going to give 40% of this away to the government? I'm going to go and live in Malta or Cayman Islands.
Now, you mentioned the privacy aspect. People can see your wallet though, right? Because it's on a public blockchain. So explain that and how that ties into privacy if everyone can see what you have.
Yeah, so it's pseudo-anonymous, meaning that it is the anonymity fails at the point where someone can connect a transaction to you. So, for example, if when you go to an exchange to buy Bitcoin, they want your identity, they want to know your passports. They, at that point, know who you are and they can track Bitcoin being moved to your wallet. Now, there are ways to hide that. It gets a bit complicated, but you can use things such as coin joins, which is like a way of, it's kind of a way of like, to make it easy for you to understand, you can mix your coins, and when they come out, they can't track it to the wallet. There are people also working on other interesting technologies and trying to push privacy, forward, but it doesn't have privacy baked into it.
Okay, so does that, there's always the fear, right? And this is something you hear more in the mainstream media, right? The fear that one of the bad things about Bitcoin is that it's very easy to make illegal transactions with it, or launder money with it, or, something like that. Are you saying it's actually pretty easy for law enforcement to find people that are doing illegal things, or is that not what you're saying?
If you are a criminal thinking you should launder money with Bitcoin,
if I'm buying heroin on the Silk Road or something like that,
that's slightly different because I don't care if you do that because I think
I'm right there with you. I'm for all legalizing drugs, but just say in a hypothetical scenario.
Yes, people do use Bitcoin on the dark web. I would personally use Monero because it has on-chain privacy. But people may use it. And if the government has the appetite to go after you and you haven't coin joined or mixed your coins and they're connected. So, for example, if you were using an exchange and then you went and bought a whole big pile of heroin and the government, like the FBI or whoever it is, was tracking that, and they could track it back to your wallet and they could get the identity, they could find who you are.
Right.
But what you should be able to do is go mix those coins and get away from that. But large scale, say, fraud using the Bitcoin blockchain is actually, it's a very stupid thing to do because you can track everything.
So interesting.
So this kind of idea it's used for fraud or money laundering is actually
because that's the big fear. Yeah, interesting.
Yeah, it's actually much easier to use printed notes these days still.
Interesting. Well, Peter, this is back to that original question. You know, if someone is willing to deal with all that volatility and wants to hold it for a long time, and they do want to get set up, what's the easiest way for them to do that?
So they need to get an account with an exchange, something like Kraken, who are my sponsors on my show. So just to be fully transparent, or Cash App or Coinbase, go and register an account. This is always the best way as well. When people say, how do I learn about Bitcoin? I always say, look, first thing is just go and buy $50 of it. Get a wallet on your phone, go to an exchange, buy it, learn how to transfer that $50 from your exchange to your phone. And it's like magic. So when you first see it happen, it's like absolute magic. Like, that was amazing. That transaction moved from there to your phone without any intermediary, which is kind of mind blowing.
Yeah.
So I would say first do that, and then go down the rabbit hole. Go down the rabbit hole and learn about everything after that. But it's like magic watching that happen for the first time. Interesting.
Well, Peter, it was great to have you on. Wish you
Great
much.
to come on, man.
Yeah, thank you. And I wish you much success with your podcast endeavors and everything else you're up to. And have a good rest of your day.
Peace out, my man.
All right, take care.
Thank you for listening to the Intelligent Investing Podcast with Eric Schleien. If you'd like to connect with Eric for questions, comments, feedback, ideas, or to inquire about being on the show, please contact Eric at intelligentinvesting@gmail.com. So, in the words of Charlie Munger, I have nothing to